Welcome back to The Exchange. Nvidia should change its name to Nvid AI, or maybe it doesn't need to, as it's now become synonymous with the booming technology. Shares rocketing 27% on a blowout quarter. Earnings 19% above estimates, its biggest bottom line beat in 5 years. Revenues 10% above expectations, the biggest top line beat in 5.5 years. And as for guidance, Nvidia sees second quarter revenues of $11 billion. The estimate was just a little over 7. That's more than 50% above estimates. And to put that in perspective, Nvidia's best revenue quarter ever prior to apparently what's coming was $8.3 billion. It's now closing in on $1 trillion in market cap. As you can see there, 958 as it sits at 387. So is all the opportunity finally priced in now, or is this just the beginning of a wave of AI-related tech outperformance? That's the subject of today's Tech Check. Let's ask Deirdre Bosa. Hi, Deirdre.
Kelly, hear me out. I'm going to tell you why some are saying Nvidia is not overvalued. Yes, it is nearing that $1 trillion club, as you just said. It is expensive, more expensive on a price to earnings multiple than any other chip maker or mega cap. But given that blowout guidance, it is actually cheaper than it was yesterday. Now, the expected earnings part of the equation went way up last night, beyond anyone's expectations. Even with today's surge in share price, that does not account for the explosive demand in AI that Nvidia is expecting in the enterprise and the consumer landscape. So one could actually look at the current action as a valuation dip. Last night, Nvidia's calendar year 24 price to earnings ratio was about 50 times. Today, it's at about 40 times. 2025 PE was about 41 times going into the results yesterday. Today, it's at a more reasonable 33 times. Now, this stock chart says it all. The stock price is rising, but the price to earnings ratio plunged thanks to what one analyst called a guidance for the ages. And that is really the metric that many analysts typically look at to judge whether stock is expensive or not. Relative to other stocks, it's expensive. Relative to its earnings ratio last night, it is not. Now, as for lateral AI and Nvidia plays, this was an idea from Bank of America this morning. Kelly, it might have been tongue-in-cheek, but it also makes a lot of sense. Real estate and car dealers in Santa Clara, that is where the headquarters of Nvidia is. And if this generative AI boom is bigger than the internet, many millionaires and billionaires, they are going to be minted. We saw what has happened here in the Bay Area, Santa Clara, still in that Silicon Valley area, South Bay. You could see an explosion in property value and purchases there from all of the beneficiaries of Nvidia.
That is a really interesting point. Deirdre, watching every angle of it. Thank you, our Deirdre Bosa. So does Nvidia have more room to run, or is it time to trim? Should I even utter those words? Let's look at what the charts are telling us, and we'll bring in Katie Stockton. She is founder and managing partner at Fairlead Strategies. Great to have you here, Katie. I am loving to know. When you look at this chart, what do you see?
Well, it is a breakout to new all-time highs, and that typically is a good long-term development. So I wouldn't want to minimize the bullishness of what's happened with Nvidia. And for those who are lucky enough to own it, I think they're quite happy. It probably doesn't feel cheaper today than yesterday to them. But, you know, the targeted objective that we can arrive at from this kind of breakout, we use something called a measured move projection. It essentially assumes that the trajectory of the existing long-term uptrend will maintain itself. And that arrives at an objective of about 409 for Nvidia, which is, of course, above current levels. So I think that that's all we have, really, to gauge as potential upside from a technical perspective, given there's no additional resistance on the chart. And yet, as we saw this gap up this morning, we did see the DeMark indicators, which are counter-trend indicators, flash sell signals on both the weekly bar chart and also the daily bar chart. So that hints at the fact that Nvidia might be overdone, at least in the short term.
Ooh, overdone at least in the short term. And so let me make sure I'm understanding. You're right, Katie. So when you break out to new highs, the kind of a generally bullish thing, you know, maybe there's some upside, like you said, in that kind of 409 area, but that on a momentum basis, and this also makes sense in the very near term, maybe it has to consolidate a little bit.
That's right. What we don't want to see, and this is typical of anything that gaps up after a very strong up move, we don't want to see Nvidia come back into that gap quickly. So today's low, which is right around 366 as it stands, today's low will define the upper boundary of the gap left on the daily chart of Nvidia. We want to see Nvidia hold up for several days above that upper boundary of the gap in order to essentially preserve the breakout and make it clear that the gap is not indeed exhaustive, which sometimes they are after big up moves.
That is so helpful and kind of explains the importance of watching the price action for the next couple of sessions. Does it have any bearing on the market overall? You know, the S&P 500, for instance, does this change the charts in any dramatic sense? Or I'm just curious if you had you know, kind of what your latest thinking was on how that one's shaping up.
Well, it hasn't helped the S&P 500 much, especially given the two-day pullback that preceded this up move today. The S&P is testing resistance around 41.55, which is a key level in our work, and we want to see it close above that level tomorrow to confirm a breakout. Certainly has the potential to do that. But the Nasdaq 100 is certainly benefiting big time from Nvidia's rally and also has the potential to confirm a breakout. It does look more likely with this move, and that would require a close above around 13,600 tomorrow. So that's looking increasingly likely. And what it could mean is that the mega caps are going to continue to kind of lead higher or exhibit upside leadership in relative strength terms at least.
Just incredible with everything else going on. Katie, thank you so much. We appreciate it. Katie Stockton from Fairlead.